Welcome to Beers with Rich. I'm Rich, editor of Under the Radar Report. This week I was attracted to this little Czech number, tapping into the European theme of which we're inundated. Mandatory Czech In, Czech Pilsener. Well, anyway, so much for Czech. It's from up the road, Akasha Brewery in Five Dock. So, Nas Zdraví. What does that sound like? Anyway, that's what they say in Czech, in the Czech Republic. Nas Zdraví. Let's crack it. Easy drinking. True to label. Let's get on with it. We're talking gold. You guessed it. Gold. Look, when the Russian military fired shells at a nuclear plant in southeast Ukraine, the gold price spiked $100. Gold is the true safe haven. In fact, possibly the only safe haven, really, for most investors. Acting as a hedge against conflict, acting as a hedge against inflation. We've liked gold for a long time. That's right, the yellow stuff that Kerry Packer put in a go bag that subsequently got stolen from Park Street. Another story, but it's the ultimate insurance. The ultimate insurance, people. I mean, those so-called cryptocurrencies move exactly in line with the market. Correlation of uno. Even more so, in fact. Like, they're actually riskier than the market because their moves are exacerbated. Gold, on the other hand, is your ultimate hedge against conflict and inflation. Let's see what's happening on the big picture, because that's what we're talking. You know, we've got two wars going on. One, hot war, which, Russia could well win. The other, an economic war, which Russia has no chance. So, Russia defaulting on its sovereign debt, inevitable. I can't see why they would pay it. But they've defaulted before. I think it was 1998, long-term capital management. They had a big stake in that. So they've defaulted before. So we're not talking Lehman Brothers. But what we are talking about are big inflation effects and sort of the risk of stagflation, which is strong inflation and low to negative economic growth. So that's the risk that we're talking about, and we're talking about more bankruptcies. I'm not just talking about oligarchs. So there's going to be effects that we're not seeing now, but that happen in the future. That's right, known unknowns. So let's have another toast. Because we have been supporters of gold for a long time. We've advocated owning 5 to 10% in your portfolio because of its hedge ability. It's a new term I just made up then. But basically what you're looking for is to own producers with a few mines. Don't get caught with that single mine risk. I got caught a long time ago and I've never been caught again. Good. It's good, actually, that Pilsner. And you're in luck this week, people. You're in luck because our mining analyst, Peter Chilton, is a big fan of Czech beer. And that's right. He tells me he travelled all the way to the Czech Republic to taste the beer. Well, that's what he says anyway. And he's come up with 3 big gold miners to whet your appetite. 3 big gold miners that you should consider owning. Although I have to point out that he does like a lot of emerging producers, some of which we cover in this week's Under the Radar report. But let's kick off with the first miner, one that's close to the heart. One that I know well. We're bringing back the beer for a toast. Northern Star Resources, NST. Why is this so close to my heart? Well, it's one of the first gold tips that I made back for Under the Radar report back in 2012. And back then I was really impressed with a young CEO, Bill Beament, who was a mine manager, I think, for Barminco previously. So this was his first go in the big league, and he was rhapsodizing about the Pilsener mine near Kalgoorlie, I think. And anyway, back then they were looking at lifting production from 80,000 ounces a year to 100,000 ounces. So it was a big deal for him. The share price back then, 80 cents. Fast forward to this week. Bill's no longer there at Northern Star, but his legacy remains. The stock is trading at well over $10, and it's producing well over 1.5 million ounces and has a target of 2 million ounces by 2026. And Peter Chilton says that this company is nowhere near maturity. Well, that's got to be worth a toast. Nowhere near maturity, and you're producing close to 1.5 million ounces. You know, there's only so much gold out there, and it takes a real Midas touch to find this stuff. Speaking of another who's got the Midas touch that I picked a long time ago, Evolution Mining's Jake Klein. I met the CEO, the rather urbane Jake Klein, straight out of Macquarie Bank, and into mining at a bar in the CBD, a fitting place with, you know, hobnobbing around financial and mining types. And there he was, and I was impressed over time with his ability to buy and sell mines, that is. So basically back then in 2015, they had like 400,000 ounces that they were producing a year, and the share price was 80 cents, I think. Fast forward to today, and now they're, you know, on track to produce around 500,000 ounces, and the oh no, I think more than that actually. Let me see. They're on track to produce around 800,000 ounces actually, and the share price is $5 or $4.50. So they've done well, and why have they done well? Because the big funds over there in the overseas markets around the world that want exposure to gold know that Evolution Mining is a safe pair of hands, and they put, you know, it's the go-to for your international gold exposure, or one of the go-tos. One that's fallen off a bit, that's actually more interesting from an investment point of view, is Regis Resources. Now this company has actually had what I would call the opposite of the Midas touch recently, which is Murphy's Law. So if it could go wrong, it has gone wrong. So this company is actually one of the cheapest diversified producers going around. That's what you need to do. You need to have a sip of beer between talking about cheap producers. It owns a couple of mines in the WA region, in that giant region, which are pretty good, which gives it sort of production growth to a degree. Tropicana, I think it's 30% interest there, will get it to sort of 500,000 ounces a year if all goes well. So that's the growth. We're talking about 25%. But the big growth is actually from a New South Wales mine named McPhillamys. Peter Chilton tells me. So this mine has been beset by problems because it hasn't been approved by the state authorities. So if this mine does get approved, you're talking about a 40% uplift in production. So what we're talking about are stocks that are leveraged to a gold price that's, you know, that's strong. It's up around 7% even after a recent retracement. But I mean, what I'm talking about is, you know, some of these blow-ups could occur. So you want exposure to in the world could occur, or financial implosions could occur, and that could really boost the standing of gold. What have we got coming up? Well, we've got 110 stocks coming the subscribers' way, that's for sure. Our research rundown, where we cover all our stocks in our small cap universe. We've got another big issue of blue chip coming your way, and also we whittle down our 110 stocks to 10 to 15 of our best buys. That's right, we do the hard work for you. That's what being under the radar is all about. Cheers to being under the radar. And to the Czech In. Not a bad little number.